What's going on? This is David. Welcome back to the channel. As always, remember to like, share, subscribe, hit that notification bell. I really appreciate it. I'm not a financial advisor. Always do your own research. Always do your own research. You appreciate it in the long run. But man, we are back. We missed Thursday, was a little down, exhausted, under the weather. Well, I don't say under the weather, but was just a little exhausted on Thursday, so we didn't have a show on Thursday. But we are back tonight, and we're gonna jump right in it, man. Remember to hit the like button on your way in, share, subscribe. I really appreciate it. And we jumping right in. This is Stock Talk Late Night Episode 9. And we want to know if this is, a lot of stuff going on right now. We're going to figure out if this is a pullback or is it time to panic with what's going on in the market. And, I don't think it's a panic situation personally, but things have definitely gotten a little crazy lately. So usually I give it a couple of minutes, man, but we're going to jump right in it. We're going to jump right in tonight, and people can come in as they may. I ain't going to hold up too much. We're going to get right into the fear and greed index. And as you see here, we are at a 16, which is extreme fear in the stock market. And I don't talk about crypto too much, but we had a 34, which is fear. But back over to the stock market. Been a little rough lately. Definitely been a little rough, but man, we're gonna have to navigate our way through this situation. But you see here, fear and greed index, we are extreme fear, 16. And tomorrow's a big day. Tomorrow is a big day. As you see here, we have the CPI inflation report at 8:30 in the morning, and that's going to possibly sway the market one way or another, or it may not, depending on what's reported. So, but yeah, that's next up to bat on the 12th is the CPI inflation report. Let's see here. So yeah, that's what's up next. Tomorrow, 8:30 a.m., CPI inflation report. And let's see what we have here. Go jump into this article real quick, and let's just see what it's talking about. Bear with me here. I think I have it. And we can just go through it real quick. See, a big inflation report is on the way Wednesday, and here's what to expect. This is on CNBC. Consumer price index for February is forecast to show an increase of 0.3% for a broad array of goods and services across the U.S. economy. On an annual basis, that will put the headline inflation at 2.9% and core inflation at 3.2%, moving lower but still above the Fed's 2% target. And let's just read a little bit here. With concerns running high that President Donald Trump's tariff policies will aggravate inflation, a report Wednesday could deliver some mildly encouraging news. The consumer price index for February is forecast to show an increase of 0.3% for a broad array of goods and services across the largest economy in the world. That projection holds both for all items measured and the core index that excludes volatile food and energy prices. On an annual basis, that will put a headline inflation at 2.9% and the core reading at 3.2%, both 0.1% percentage point lower than in January. So promising news. So hopefully that, nothing crazy goes on tomorrow with the inflation report. And just reading a little bit further on, the good news is those rates represent a continuation of a steady but quiet, slow drawdown in inflation rate over the past year. The bad news is that both are also still well above the Federal Reserve's 2% goal, likely keeping central bank on hold again when it meets next week. Now, that 2% is going to be tough to get to, but hopefully tomorrow's report at least have us going in the right direction. So Um, yeah, at least never panic. Yeah, definitely not panicking. But concerned, concerned because, let's be honest, the market's been in a slow decline. We have some really, really big drawback days, and then we come with a nice green day. Um, but overall, and we'll look at it in a minute, like the market's definitely been pulling back, but definitely not a panic mode right now. Let's see what else we're looking at. All right, we expect broad based deceleration with weaker core goods and services. Morgan Stanley economist Diego, I ain't gonna want to butcher his last name, said in a note, while still elevated for three reasons. One, we expect used car prices rise because of past wildfires. Two, according to our analysts, certain goods and services show residual seasonality in February. And three, we think supply constraints keep average inflation elevated in February. So we'll read a little bit further here. The big question now is where things head from here. Trump's tariff moves have stirred market worries of both rising inflation and slow economic growth, with Fed officials historically more attuned to the inflation side as a dual mandate for price stability and full employment. A prolonged period of high prices could put the Fed on the sidelines for longer. And however, Federal Reserve Jerome Powell and his colleagues have indicated that in their view, tariffs historically have been one-off price increases and not fundamental inflation drivers. If that's also the case, this time policymakers might look through any price blips from trade policy and continue to lower rates as markets are projecting this year. So we'll stop there. So we shall see. We should see. But tomorrow's a big day with CPI, first thing in the morning, and we'll see where things go from there. But let's jump right into a little market recap here, and let's take a look at the S&P and let's just see where we headed, what's been going on so far. So lately, and let's start with the Dow. The Dow closing today down 1.14%, down 478 points. And you see we are at 41,433 right now. Over the past week, the Dow is down 2.66%. Over the last month, the Dow is down 7%. And year to date, the Dow is down 2.61%. So I don't know, man. For me, when I see year to date down 2%, and that doesn't seem like a big number to be down, but it's like, man, we're in March already. We're 3 months in, and we were, heading in a positive direction, but now just to see it, turn around, and we don't know how long it's going to go that way, just not an easy, an easy feeling for me, but others may feel otherwise. And you see the S&P today down 0.76%, down 42 points on the day. Over the last week, the S&P is down 3.41%, 197 points. Over the last month, the S&P is down 8%, 496 points. And year to date, the S&P is down 5%. So although not, maybe a cause for panic, I still think it's a slight concern in the direction that we're heading. So I think I did an over and under a couple of shows ago of whether the S&P would end up over the 6,500 mark. And I think I may have said over at the time, but man, we're at 55.72 right now. I'm not sure. Down 5% year to date. It's going to be tough, man. It's going to be tough because I need to see some type of change in direction. But like I said, I don't know if it's a cause for panic, but maybe a little slight concern. We're down 5% on the S&P for the year. We've been up, 20%, I think, 20% plus over the last 2 years. So normally, we have pullbacks every couple of years, but it just seemed like something was a little different this time. So, I'm not going to go in and sell my positions or anything crazy like that, but I'm definitely going to be on alert, in regards to what's going on, with the stock market, especially the S&P and the NASDAQ, which I still have a lot of my portfolio heavily in the NASDAQ because that's just how I started. You see the NASDAQ down almost even today, but we're sitting at 17,436.10. And I think at one time, we've been up over 20K this year, if I'm not mistaken. We'll see in a second. Over the last week, we're down 4.49%, 819 points. Over the last month, we're down 11% on the NASDAQ. Man, that's tough. That's tough. Down 2,200 points over the last month. And year to date, we're down 9.71%, down 1,800 points year to date. Over the last year, we're still up 8%. Over the last 5 years, still up 121% on the NASDAQ. Wow, that's crazy, right? But year to date, we are definitely on a downturn. And as you see, we were well above, I ain't gonna say well above, but we've been over 20K at this point, this year. But right now we're sitting at 17,436.10. So let me know your thoughts. Is this are you guys buying right now, or are you just kind of waiting and seeing what's going on? And giving a little bit more time for the market to kind of clear things out. So, let me know if you guys are buying right now. I do have 2 positions that I've added to the portfolio in the last week or so. I didn't get a chance to talk about it on Thursday because we didn't have a show on Thursday, but I have added 2 positions to the portfolio in the last week. And let's take a look at those 2 positions. One is, and let me know if you have it in your portfolio, GLD. Yes, a little gold we've added to the portfolio. And you see GLD is trading at 269.16, actually up today 1.17%. Over the last week, up 0.44%, 1 point, basically kind of flat. Over the last month, kind of flat. Year to date, GLD is up 11%. So we see what the NASDAQ was down 8-9% year to date. Well, GLD is up 11% year to date. And I just recently added this to my portfolio, to my ETF portfolio. I sold some positions and I added GLD. So do anybody actually own any GLD right now? I think it's something that I'm going to keep in the portfolio for a little while and start building that position up. I don't have a lot of it right now, but like I said, it's in my ETF portfolio, which is one of my newer portfolios, and I'm going to monitor and just build it up. But it's doing well for me so far. And the second position that I added is, so if you got gold, right, what else do you need? You're going to need a little silver. So I also added some SLV to the portfolio, also to my all ETF portfolio. And you see iShares Silver Trust trading at $29.96, up 2.92% on the day. Over the last week, up 2.50%. And over the last month, up 3%. And year to date, man, SLV is up 13.79% year to date, over 3 points. So those are the 2 positions that I've added to the portfolio. I've added some gold and I've added some silver. And, like I said, they're in my ETF portfolio, which is a smaller portfolio, but I think these are some positions that I can build up and kind of help hedge against what's going on in the market. So we see that the Dow, the S&P, the NASDAQ, all 3 are down year to date, but gold and silver is up. year to date and up pretty well. So we see silver year to date is up 13% over the last year. You see it's up 34% over the last year. And going back to the gold here, gold over the last year is up 33%. So what was the S&P up? 20 something percent the last year, and over the last year for gold is up 33%, and year to date we said it's up 11%. So those are two new additions to my portfolio: gold and silver. A couple shares of silver. I don't think I quite have a full share of gold, but I think I'm going to keep these in the portfolio and start building upon these two positions. So, like I said, they're in my smaller ETF portfolio. I've done some videos on my ETF portfolio a while back, but now we made some changes, and we've added gold and we've added silver. Overall, I'm down on that portfolio right now. And that portfolio is about 11 months old. So I've been up as much as I think 14, 15%, but with the recent, changes in the market, I am down, but I'm okay. I feel pretty good about it. So if you guys made any purchases over the last week or the last couple of days, let me know what you guys purchased. So I also bought some, I was able to add to my Google and my Apple position today, and I used some income that I made off a cover call to add to my Google and Apple. So I think I was able to sell a cover call on Amazon because Amazon popped a little today. And let's take a look at Amazon. So what I was able to do was roll a cover call that was going to expire Friday. I was able to roll it out till next week. You see Amazon. Hold up. Am I tripping? AZ. I'm tripping. Hold on. Here we go. So you see Amazon's up 1% today, and it was actually up a lot more earlier in the day, but it did come down. But I was able to roll a cover call out another week and gain some income, and that allowed me to buy some more Google and some more Apple. So like I said, that's one of the benefits of having 100 shares of a particular stock, especially something like Amazon that offers pretty good premium. I'm able to sell cover calls, able to earn extra income, able to use that income to buy extra shares. So that's what I did today. Use some cover call income to add to my Apple and to my Google positions. And like I said, over the last few days, we've added GLD and SLV to the portfolio. Just trying to hedge against some of this craziness that's going on in the market. So if you guys bought anything lately, let me know what you guys purchased. If you're adding to a particular position right now, let me know what you guys are adding to. So also, if you haven't already, check out my February dividends video that I put out last week. Just giving you guys an update on the dividend income so far this year. We're doing pretty well ahead of last year's pace. So, we'll see what's going on in March, how we work. I expect to keep my, dividend income increase, year over year, right? March is going to come down from my expectations because of just what's going on in the market. Some of the payouts I was expecting to get and probably won't be as high as I would like them to be, but I think that we are still in a good position with our dividend portfolio. And, I think we're definitely on pace to outpace what we did last year. May not hit that 12K goal, but we should outdo what we did last year. I think we made a little bit over 8,000 in dividend income between all the portfolios, between myself and my son's account. So we're on pace to exceed that. May not hit the 12K, but we're still only 2.5 months in, so we'll see. We'll see how that goes. But yeah, if you guys have bought anything lately, let me know. We can do a little recap on some of these other positions. I mentioned Google. Google has been getting hammered lately. We'll look at GOG. You see Google's now at 165.98. Is anybody buying Google right now? Like I said, I bought a little bit today to add to my portfolio. Anybody out there buying Google right now? Man, this is crazy. This was over $200 probably about a month ago. Now it's at 165.98. Over the last week, down 3.65%. Over the last month, down 11%, 21 points over the last month. Year to date, down. Oh, so maybe we didn't hit. It was in the 190s. Nope. Yep. February 4th, we was at 207.71, and now we're at 165.98. So year to date, down 12.84%, down 24 points. Anybody buying Google right now? I am. Whenever I can, I'm trying to add to my Google portfolio. So you remember Google pays a dividend as well. So if I'm able to catch Google on the red day, if I have some spare money that I could, put towards it, that's what I'm doing. So like I said, we use some cover call income today, and we add it to our Google portfolio. And if it continues to drop, I'm gonna keep buying Google. So that's to me that's a no-brainer, even with the craziness that's going on in the market. Let's take a look at Apple, another position that I added to today. Let's just take a look of how it's been doing. And Apple's down to 220.84, down 2% today, 2.92%, almost 3%. Over the last week, Apple is down 6%, down 14 points. And over the last month, Apple's down 5%. And man, Kramer got an article here explains what Apple investors should do with the sinking stock. Man, everything's sinking right now. So, I'm not going to paint it all on one company. Everything's been kind of crazy, as we've seen. Year to date, Apple's down 11.81% year to date. So, anybody buying Apple? Lisa says she's at 23 shares of Google. And yes, I want more. Yeah, for sure. For sure. Man, Google's one of my 100 share positions. And but I'm still trying to add, and my cost per share is going up every time I buy, but I just believe in Google long term that if I have an opportunity to buy, I'm going to keep buying. So, I was buying it at 200 something and it's down at 160 something. I'm still going to buy. And, I believe whenever this market turns around, I think Google's going to turn around as well. So I'm pretty confident, in the company overall. You see Apple's down 11.81% year to date. What else? Let's take a look at NVIDIA. This time last year, man, NVIDIA was the hot stock. It was, did a split and everybody was jumping in, and including myself. I have some NVIDIA, hadn't sold my NVIDIA position. NVIDIA's at 108.76 now, up today, 1.66%. But over the last week, down 7%. Over the last month, down 18% over the last month, 24 points. And year to date, NVIDIA is down 19%. 25 points. And you see, we've been up to in the 147, 149, but now NVIDIA is at 108.76. So what do you guys think about NVIDIA? Is it time to, cool off on NVIDIA, or is this just a good pullback to add more shares? And I'm not going to lie, I haven't bought NVIDIA in a while. I was investing in it every week. But I just cut back a little bit on some of my positions that I were investing in. So I haven't bought any in a couple of weeks. But I think 108 is a pretty decent price. And so I may look to add some more NVIDIA soon. One of my other semiconductor positions, AMD, I did end up selling out of AMD a few months ago. Because I do have NVIDIA, I do have SMH, which is the ETF. So I thought it was time to kind of get rid of AMD. while I was still in, I'm not sure, I can't remember if I was still in profit or not, but I no longer have AMD in the portfolio, but I do still have Nvidia, and I do still have SMH. And let's see what else we got. What else we got? Let's take a look at Palantir. Palantir at 78.05, up 2% on the day. Over the last week, down 9%. Over the last month. God, Palantir down 30% over the last month. 34 points. Palantir was at 124.62. My goodness. Still up year to date, but man, that's year to date 3%. But man, that's a heavy blow right there. Down 30% over the last month. Any Palantir holders out there? And let's just take a look at a few more. Let's take a look at the steady ETF, SCHD. SCHD is even down 2%. And over the last week, down 0.36%. Over the last month, down. Year to date, SCHD is still holding up year to date, though, up 1.54%. Very popular ETF, known for its dividend payout increases. And of course, I do own some. I do own SCHD, and I actually add to that position every single week. So, one of those stabilizing positions, even in this crazy market. The SCHD is still up year to date 1.54%. So, yeah. What's another one that people say? Popular ETF, VTI. VTI down today. Over the last week, down 3.66%. And I do have VTI. I do invest in VTI every single week, even with what's going on. And over the last month, down 8%. And year to date, down 5%. But like I said, VTI, which is the total stock market index, I do invest in VTI every single week, and that's not going to change at all, even with the downturn in the market. So, yeah. What else? What other positions? What other positions that's popular right now? Any Microsoft holders out there? I do own some Microsoft, and Microsoft was up today, surprisingly. Over the last week, down 2%. Man, down 7% over the last month. Everything's just getting hammered this year. Just hammered. Microsoft down 9% year to date. So, going back to the question whether it's pullback or panic mode, I'm still not ready to say we're in panic mode. You should be paying attention, of course, what's going on with politically, and you just never know, man. With these tariffs and all this other trade war, all this crazy stuff that's going on, and you see how it does have an effect on the market to some extent. It's kind of crazy right now. It's kind of crazy. And let's see. What are some other headlines? Some other headlines that we got going on. I'm on CNBC right now. Let's just take a look here. What other headlines we got? Southwest Airlines will charge to check bags for the first time. Launch basic economy tickets. Any Southwest flyers out there? I'm not a big flyer. I've only flown once in my entire life, and that was with Delta. So, but yeah, Southwest, that was big news today when I saw it come across. So they'll start charging the check bags for the first time. You see here, coal shares plunge 20% as retailers give rough outlook for the year ahead. Mm, mm. Dick's Sporting Goods is latest retailer to forecast rocky 2025 amid recession fears. Airline CEO warns domestic travel demand is slowing. Ooh. Delta Airlines slashes earnings outlook on weaker U.S. demand, sending shares lower. All right, all right, all right. Yeah, that recession talk, man, is just it's crazy right now. It's crazy. Hmm. Interesting, interesting. What else? Anything on the watch list? Any stocks that anybody's watching that we should be on the lookout for? And for me, I don't, like I said earlier, I bought some gold, I bought some silver. Those two I think that you should have on your watch list. If you just join in, let's take a look here. Those are my main stocks that I'm watching right now. And let's see. Looking at the VIX here, VIX has been rising over the last week, up 12%. Over the last month, VIX is up 10.68%. So lets you know the market is real volatile right now. But I just talked about gold, just talked about silver, but those are two that's on my watch list. And I say on my watch list, but I've actually added them to the portfolio. So GLD and SLY are currently, hold on. No, not SLY. What is silver? GLD and here we go, SLV. So those are two. Let me go to it here. Those are the two that's on my watch list and that I added to the portfolio. So SLV, which is silver, and GLD, which is gold. Those are my two additions to the portfolio. And what else we got? Lisa says, can we look at Court? And you mentioned that too. That was on my list. I didn't add anything. Court 55.42. And Lisa, you said you're in Court right now, right? Down a little bit. I don't have any. I did write this down. Down 18% over the last month. So I've been getting hit a little bit over the last month. It was like it was up in the $70 range back in February. What are we saying about Court here? Might have to go to Yahoo Finance to get some info. Let me see what's going on over here. Court. It says Corcept shares rise more than 55% in the last 6 months. Okay. And there you have it. Core is up 55.19% over the last 6 months. Up 19 points. Wow. Okay. And year to date, still up 9.98%. So at least it's Court in your portfolio. And what's my favorite monthly paying investment? That hasn't changed. And it's not my highest, but it is my favorite. JEPQ. And yeah, JEPQ is my favorite monthly paying ETF. And I'm going to we can look at that over at Yahoo. I want to go to Yahoo Finance with that. So let me switch over to here, and I can show you why. And I'm gonna just go to JepQ. And of course, we've been down a little bit lately. Let's just take a look at some of the payouts for JepQ. And this is for ETF that's been not only holding its share price, but increasing it over time. But we are down, of course, with the market. But you see it paid out 0.48, 48 cent a share last month that we just received. What's called this Yahoo Finance? 45 cent. Yahoo Finance is jumping around. Then we had 45 cent. Okay, that was a little, yep. December 46 cent, 51 cent payout per share, 49 cent payout share, 55 cent. So JepQ is without a doubt, it's been one of those ETFs that not only held its position over time and increased its position, but also pays out a nice dividend. And I don't know my average buy-in right now, but I'm up overall on my JepQ position. And like I said, it pays a really good dividend payout. Last month, between my two accounts and my son account, we received about $70-something in dividend income. So JepQ is my favorite one. It's the perfect combination of paying a nice monthly dividend and holding this share price. So another one that I like is high risk, right? Kind of depends on the price of a stock. It's one of the yield maxes. And I don't recommend yield max because you might not like the risk tolerance, but this one, yield max, that follows the Amazon stock, has been one of my better payouts. And I caught it at a good price. So I'm still way up on my share price. And it also pays a nice dividend. So you see it's only trading at $16.60 right now. Just got to be careful because of what's going on in the markets right now. So, but this is a monthly paying dividend position. You see in February, it paid out 55 cents a share. January, 40 cents. We received 86 cents back in December. We received $1.17 in November, 76 cents a share, 60 cents, 66 cents, 47 cents, so 77 cents. And what usually happens is that if that Amazon price is booming, you're going to see a nice dividend payout. And this may be a good time to get in because the share price has dropped, because Amazon share has dropped. The market is down right now, but AMZY has been a great monthly pay and dividend position for me. And if you go back and look, at my dividend video, you'll see that I received some nice monthly income on AMZY. Do I have a REIT other than O? I actually don't own O. And the closest thing I have to O is Maine. And I know you have Maine. You heard me talk about it. But other than that, I don't have any REITs at this time. I don't have any REITs. It was at one point I did have quite a few REITs. What did I have? I think I had like CTO. I had O at one point. I've had quite a few over time, but not at this particular time. I've been saying that I was going to get back into O. I just got to find the right portfolio to put it in, to build it up. But I don't currently have really any REITs because Maine not really considered a REIT, right? It's kind of in that vicinity, but nope. What other REITs would you recommend besides O, Lisa? I was big on REITs at one point, and I don't have a problem with them right now. And with this volatility and in the market and just the unknown, REITs may be one of your best bets right now. So, some people may want to park some money in O. I don't have a problem with that. That may be a good idea, actually. And let's see what is O trading at right now. Because O went through some downtime, but now it's picking back up, if I'm not mistaken. $56.71. Not bad. Not bad. Every month on the 15th, you're gonna get that payout. But so for sure. I don't know why my Yahoo Finance is just it goes haywire. Trying to see what O has been paying out. 27 cents for the last payout, 26 cents. 26 cents. We know O is known for increasing his dividend every month, whether it's small or big or whatever. Probably going to see an increase every month. So you see what O has been paying out. I'm looking at the share price. Been pretty solid, of course. Did get back over the 60 mark back last year. In the 50s right now. But O is a fan favorite. O, just like SCHD, is fan favorites. And, a lot of people look to those positions for stability. What else you got? BDC. Let me see. Let me get off of. No, actually, I'm gonna go back because I need to see the payout. So you said BDC. Okay, Belden. Okay, trading at 102.12. I like this 1 year target, 137.20, just without even digging in too deep. Let me see what it's paying out of here. So the payout's kind of low, but what I see is increases in the share price. So Lisa, it was up there. It's then kind of came down. It's actually maybe a good time to get in. You own any BDC, Lisa? This may be a good opportunity based on what it was. Okay. Not a tick. I got you. Business development. I got you. I was wondering. Okay. MSIF. Okay. MSC income. I like these low prices, man, for stuff like that. For some income positions, something that's not too expensive. Let me see what we're paying here. And this is without even digging deep into the company. Just a quick look here. Does this pay a dividend or is this fairly new? Let me see something here. This coming around. Go back here. I don't see no payouts on Yahoo Finance. This must be, is this something that just MSIF? Maybe I put the MSIF income fund. Let me see. Okay. Got a dividend coming up in April. Okay. I got you. So maybe it hasn't done a payout yet. Okay, business development company. Let me write this down because it's something that I probably want to keep an eye on here. MSIF, just to kind of see how it's going to operate. So I'll add that to my watch list. Appreciate it. Something to keep an eye on. And I'll be looking out for that dividend as well. Price has been steady, pretty steady. So something that you probably want to dollar cost average into. Okay. Gotcha. Cool. All right. So we're at the 46-minute mark. I'm not going to stay on too long tonight. Just want to jump back on. Wasn't able to get on Thursday. Like I said, feeling a little down, but we back at it a little bit now. And just going to keep our eyes on these markets, man. Definitely been down year to date. We have some green days here and there, but it seemed like those are like, I don't want to say false breakout days, false green days. What is it? Like if you're a chart person, what is you're creating what lower lows or lower highs or something like that? Well, you have some big red days, you come back with a green day, you may think you're in the clear, then you get hit with another big red day. And it's just, I can look at the value of my account and know that we're slowly trending down right now. So hopefully, we can see a reverse in the market soon. These tariffs, this trade talk, all this tough international talk, crazy stuff. Hopefully that can get under control and we can get back to letting the market do what the market does. But in the meantime, I'm still, collecting dividends. I'm still on a dollar cost average. I'm still going to use my cover call income strategy to keep adding shares whenever I can. So it's definitely not a panic time. Um, I've seen some rough times in the market, 2022, 2020. Those were some rough periods. Um, so we're just gonna. It's still early in 2025. I always root for the market. It doesn't matter what administration's in. I always root for the market. So I'm hoping that the market turns around so we can get back on the up and up. But in the meantime, you know, use these opportunities to get in on some good prices. We looked at the Google price, we looked at the Amazon under 200. Google's at 160 something. Apple's been falling. All these are solid companies that I think are going to be. We've proven the test of time. Once the market turns green again, you're going to see those positions increase. So, the big boys, I'm not too worried about. Um, just got to handle these rough times in the market right now. So, but yeah, man, I think we're gonna wrap it up for tonight. This is what episode 9. We'll be back on Thursday. To talk some more stock talk. The CPI inflation numbers are coming out tomorrow, so I'm pretty sure that's going to possibly have an impact on the market. And we'll see. So you'll know that before the market opens on tomorrow. So be on the lookout for that. But in the meantime, man, just keep your eye on what's going on. Stay locked in. I'm not selling out any of my positions right now based on what's going on, but I do. I am slightly concerned. You know what I mean? So I'm slightly concerned of what's going on. I don't want to see all the hard work over the years get wiped out in a few months based on some stuff that really don't have an impact on the everyday person like myself. You know what I mean? So, but yeah. I don't like a lot of uncertainty and crazy stuff in the market. I like to put in a plan as a long-term investor and keep executing that plan. So and letting the market do what it's supposed to do. But yeah, man, that's about it for tonight. I appreciate you guys tuning in. Remember to like, share, subscribe. As always, I'm not a financial advisor. And we're going to do this thing again on Thursday. Always remember to invest in yourself. And, keep your eye on the prize. So Until next time, I will talk to you guys later.